a quickie for our members, just trying to help show you how I use a profit matrix to help determine risk and reward ideas, and it may help you with your trading. I hope so. We're using it as an example with the Emini S&P. The multiplier is 50. So if we read down the column, the A column points risk from 1 to 10, and if we read across from left to right, going towards our number of contracts from 1 being the lowest to 5 being the highest, we can start to get an idea of how much we can risk and how quickly things can get out of hand for us if we start to add in more contracts and obviously allow the points to run against us. So this graphically will help to show you, I hope, the nature of the beast and how this can get out of hand in terms of risk reward if you keep averaging into a move that's going against you, especially if you're one of those traders who said, you know, it's no problem, I can add in a couple more, next thing you know, you're doing some damage to your account. I usually find it's better just take the stop out and try again. Anyways, this will help show you that idea. The multiplier is 50, so whatever you want to use for your contracts, you can always do a shortcut. Put it here. So 4 contracts times 1.5 points, if that's the way you're playing, either for or against, that's a $300 risk or reward based on 1.5 points. So this is the down and dirty, and if you scroll down here to the points rewarded, risk and reward idea, now you can see how if you contain your losses and try to keep risk and reward better in perspective, risking a few points, this is the kind of trading that can very easily and quickly, if you have a directional move, only with 1 or 2 contracts, you could still earn yourself a nice day's pay. No matter what you need, the first idea is to earn enough to sustain ourselves and create a living, and then we try to accumulate beyond that. So depending on your goals for the day and the week, set this up to say, okay, with 1 or 2 or 3 contracts, I can still have myself a nice day if I can grab a few points. If you go to the next level, where you start to understand the power of scaling, and let's say you have 4 contracts and you're going the right direction. In the first one, you pull off 2 points. That's a total of 100. On another contract, you get another additional point. So now you've got 150. So you've got 250 already in your pocket, and you break even. You never want this trade to go against you. And let's say we have 1 more, and your goal is, I'm going to go flat if I can get 4.5 points. I just want to take it and put it in my pocket. So now you have another 2.25, and you add that up. That adds up fairly quickly. You know, $475, whatever. That's a nice day's pay for you. And if you want to come back after lunch, say, and take another shot at it with part of your profits, and you're fortunate enough to, say, come up with another trade where you get 3 points, add that on top of it. That's a great day. And you're only going to risk a portion of what you made. If you're a bigger trader, then just take the number of contracts and think of these as units. And instead of this being 2 or 3 or 4 or 5, you can do whatever you want with that. You can extend this out to 10, or you can, an easier way is just take this and think of this as 20. Okay, so if you're a big fish, you know, all you need to do is just change what these numbers are at the top, and you can easily see what you're doing in terms of risk and reward and so on. So you can put that at the top, and you can put it also down here. So whatever you put here, it needs to be relative, you know, points risked and the reward you're looking for. So I hope this little matrix helps you. Remember to abide by your rules, which is accept the maximum stop loss for the day, maximum drawdown. I call it MAD, M-A-D-D, the maximum allowable drawdown. And if you get busted on any one day, cool off, come back, live to fight another day. All right, so the danger zone obviously is here We can get out of control very quickly, and this is the bucket shop rule. When traders, let things get out of hand, and then they get a good example. This being filmed on February 4th, and a good example is all the traders who got stopped out Friday, thinking, okay, we're going to go a little bit lower, and instead they get taken to the cleaners, and then today it comes back without them. Trade idea was right, but a day too soon. So live to fight another day and then say, okay, I know that's where they're going. So they stopped me out the other day, but today I'm coming back and I'm going to try one more time. I mean, that's the way a sensible trader will use something like this. Hope this helps you. Till next time, guys, be well. And you'll find this is going to be located in the member area for you to use. Any of our members free to just copy this and use this, and I hope it helps your trading. All right, be well.